I trade myself, and I'm mentoring with Ken at the moment, and it's all going quite well. So really, I'm really just getting into the peak performance side of trading. So I'm not moving too quickly, but I'm taking it step by step. So getting some consistency up together. So that's where I am with trading. Um, we'll just hand it over to Ken now and let him present the webinar. Thank you, Ken.
Thanks, Derek. Yeah, hi, Chris. So I've been in the financial markets for about 19 years now, and about 8 years ago now, we started to research the biological and neurological factors of trading decision making. And so in short form, we just simply call it the science of optimal decision making. And so we have some applied technologies, and that's not the point of today's conversation or any of our webinars, simply to start to inform the community, create a community that has an awareness or a building of awareness of the biological factors which affect good decision making in the trading environment. So I usually start by telling people that there's two components of the human system which actually make decision making, and one is based upon our nervous system, and this is our subconscious response, and it's simply the means by which we receive external data through our sensory modalities, and via the nervous system it causes a response back. So for instance, it's very hot outside, your nervous system pulls this data in, it then organizes itself to commence sweating in order to maintain a homeostatic temperature of 36.7 degrees. We don't have to think about these things. The second component of decision making is actually our executive functioning, our cognitive processing, which is a double-edged sword. It can be good, but it's prone to a lot of error. So the error comes by misinterpreting the data which is coming in from our nervous system. So as an example, you want to go to a football match. It's early in the morning, your friends come to pick you up, you open the door, you can feel that it's cold outside, so your subconscious response, your nervous system is saying it's cold outside. And you think to yourself, I don't want to, it is cold now, but it's going to get warmer later, and I don't want to be carrying my sweater around with me, so I'll handle a little bit of the cold in the morning. We'll be in the car anyway, because I don't want to carry a sweater later. Now, it just might so happen that it doesn't get warmer later on, and you're cold all day. So that's the way in which our cognitive processing can actually misinterpret reality, which is coming in from our nervous system, to make an incorrect decision or a suboptimal decision. The balance between the two systems, so the cognitive processing, the executive functioning, the frontal lobes receive the information and they say, it's cold outside, I'll get a sweater, and you take a sweater and everything is fine. So that's when the two systems are in balance. And so we have a very simple equation which just says the present environment multiplied by the amount of resistance that we're experiencing cognitively will equate to the degree of success that we achieve. So as an example, we have a little friend here with a light bulb on his head. That means that he has a goal or an objective. And so let's take an example that he's standing on the footpath and he wants to cross the road. He has an objective. And so he's within his present environment. His nervous system, through the sensory modalities, is picking up the movement of the traffic, the air temperature, the wind velocity. It's picking up all of this sensory data, and is now, with proprioception, is also telling him when are there gaps in the cars that he could run across the road to get to what he wants to do across the road. Now, depending on the amount of cognitive resistance that he's applying to this process will equate to whether or not he walks across the road. So if he has a lot of resistance in his head, which means that he has a lot of self-talk, a lot of doubt, a lot of fear-inducing self-talk, he actually might not ever walk across onto the street from the pavement. He might get halfway, run back, or if he doesn't have much resistance, cognitive resistance, he'll simply walk across the road when the opportunity presents itself. Now, this is very important in terms of trading. But what we do is we look at this very simple equation and we look at it in a different light. And we look at it in terms of the present environment. We can measure the biology of our present environment, whether with a device or without a device. We can stand on the street corner and say, okay, I'm feeling relaxed. The wind's doing this. The cars are moving this fast. There's a lot of traffic. There's not much traffic. The sound of the cars, they're going fast, they're going slow. We can quantify the present environment much the same way we can quantify the amount of resistance. Either with a device or without a device, you can simply have enough self-awareness to listen to what you're saying to yourself, for instance. And the degree, when you multiply those two components together, you'll come to a realization of how afraid or how excited are you in order to go across the road. And this can be measured as well. So in the trading environment, it's obvious that biologically we can tell the difference between a winning and a losing trade. So on the left-hand side is a losing trade, on the right-hand side is a winning trade. They're totally two different biological and what's called psychophysiological expressions. But as this is happening, before these two individuals, one with the losing trade has clasped her eyes, the guy with the winning trade has raised his fists in celebration. Prior to this occurring, it's like a bell curve. You have a level of biological excitement and anticipation that results in this form of body language. But it's what happens underneath the body language which is of real importance, and this is when we can start to mitigate trades and start to focus on augmenting the biology in order for it to be in an optimal state, which is a part of what we're talking about. And how important is heart rate variability, or the ability to mitigate heart rate variability to get into an optimal trading environment. So these are some trades that we've measured the biology with the trading outcomes. And I'll show you winning trades and losing trades and the differences between the biology of the two, specifically in terms of heart rate, which is today's conversation. Now, heart rate variability is simply a measurement of the electrical output of the heart in three different types of ranges. One range is called very low frequency, then the next range is low frequency, and the third range is high frequency. And it's just a calculation of hertz. Now, heart rate variability, these three categories of different sorts of frequencies have, through academic research, shown that they are predisposed towards creating either optimal decision making or suboptimal decision making. Now, what do they reflect? They actually reflect the movement into a parasympathetic response or a sympathetic response. And so, simply put, heart rate variability, or the beating of the heart, starts to dictate whether or not we go into an excited state of mind, or we actually go into what everybody knows as a fight-flight response. So a fight-flight response is a sympathetic predisposition, and a state of excitement and positive expectancy is what's called a parasympathetic response. And they're both based upon the nervous system, responses in the nervous system itself. So this is a winning trade in the euro, going short in the early morning hours at about 7:30 in the morning. And what you'll be able to tell, we're going to focus on this section here. And this section here is a calculation of heart rate, or the interbeat interval. Down here we have what I spoke about. These are the three ranges of heart rate. Well, this is literally what heart rate variability looks like. You have very low frequency, and high frequency power bands. But this is the most the clearest one to be able to see what's actually happening with the heart. And in this winning trade, you can note that the power output of the heart is relatively stable, and we have this very large peak here. There's the entry of the short position, and there's the exit of the short position. And the heart rate, which you can see here, this red section here and the red section here, they're both identical. They're interbeat intervals. And they're just comparing the heart rate to abdominal breathing and to thoracic breathing. But you can notice the very large deceleration in the heart rate right about there. Now that corresponds with this derivative calculation of power spectrum, and it's peaked at 4,000. And it's actually in anticipation of the profit target being hit. So about 2 to 3 minutes, about 3 minutes prior to the profit target being hit, the nervous system and the autonomic nervous system actually, in anticipation, went into excitement mode. And so when we zoom into a 5-minute portion of this 40-minute recording, we can see that there's very good what's called amplitude. The peak to trough movement of the heart rate is actually very strong, which produces a strong power output, power spectrum, which produces good, healthy heart rate variability. So heart rate variability is really telling us sort of what is the consistency and the amplitude of the heart at any given point in time, which is resulting in this equation here, which during this winning trade early in the morning. So the early morning it tells us a couple of things. It's early in the morning. That means that the trader has been well rested last night. He's had a good breakfast in the morning, whatever that means for each specific person. And there are certain things which are conducive and non-conducive to have in the morning prior to trading. That's a different topic. But this trader has slept well and eaten the right foods for optimal decision making during the trading session that day. And that's produced a very good, consistent heart rate, which has high amplitude because the body is rested. So it's got a lot of energy to push the heart at maximum amplitude. So that's a winning trade. This is a winning trade later in the afternoon. So why is this an important example to look at? It's because later in the afternoon, the trader's already been trading for 5 hours and we can expect some fatigue. Now, the fatigue is going to affect the heart rate because more than likely the heart's not going to be able to be achieving an amplitude that it did early in the morning. And so, as we can see, even though it's a winning trade, which means that the level of stress that the trader is feeling or level of excitement, positive expectancy is the same as in the morning, but we notice that the range here in the morning was between 1,000 and 4,000, and all of a sudden now we're peaking at 1,000, which just tells us that the amplitude is much lower. So on the first graph, the amplitude of the heart rate was just as large as what the amplitude of the breathing was. We're now later in the afternoon, the breath rate is still maintaining a very similar amplitude to early in the morning, but the heart can't quite push as hard as what it does in the morning, which reflects itself in a lower power spectrum. Now, this is a losing trade early in the morning. So again, we can assume that, and we can state that the trader was well rested, had the same thing to eat that he does every single morning prior to trading, but it's a losing trade. And so what we can notice is the extreme volatility in the heart rate. And that extreme volatility has put pressure on the heart that it actually, as a muscle, it's not relaxed enough to be able to generate the amplitude that it can under homeostatic conditions. So when it's in a comfortable and relaxed environment, early in the morning, it's producing a power spectrum range between 1,000 and 4,000. All of a sudden, because the trade has gone into a trade in the wrong direction, the heart as a muscle now has constricted from pressure, from being in a threatening environment. and can't produce a power spectrum more than 1,000. In addition to that, it's experiencing extreme volatility now in the interbeat interval. So when we go and magnify it, we start to notice that a lot more very, very volatile decelerations occurring in the heart. And now even the structure of the interbeat interval is actually starting to deteriorate. And again, that's causing a low power spectrum. So there are vast differences between winning trades and losing trades, and the effect of fatigue and stress on the heart. So this is a losing trade in the afternoon session. Again, it means that we also have to add on to a losing position in the morning, the effects of fatigue. And lo and behold, you'll find that instead of a losing trade in the morning having a power spectrum between 500 and 1,000, this time later in the afternoon in a losing trade, we have a maximum power spectrum of 500. In addition, we have extreme volatility that's occurring due to the pressure on the heart. And we can notice now that the amplitude of the heart rate has decreased even more. And what we start to notice is, again, we have a deterioration of the interbeat interval, that it's not even looking what it should under normal conditions. The heart rate to breath rate coherence is now totally gone off. This means that the heart rate is decelerating when the breath rate is inhaling, which it should be the opposite way around. Our heart rate normally under homeostatic parasympathetic conditions, our heart rate will decelerate when we exhale, and it will accelerate when we inhale. And so we've had a total collapse. With this sign of extreme fatigue in the heart here, it's produced an extremely low power spectrum once again, because there's no amplitude. We can notice here that the power spectrum has dropped down to about, I think the proper reading was 25. And so this is the effects of heart rate on winning and losing trades, and the need to start to mitigate your heart rate, be aware of your heart rate, and know what can you do in order to be able to pull a maximum output of your heart. Now, why is that important? It's important because you want there to be the correct blood oxygen supply, which is going to your brain. You don't want any adrenaline or non-adrenaline to be coursing through your veins, because all that does is decrease the blood oxygen supply to your brain, which makes your decision making even less optimal. It puts stress upon your muscles, which decreases your heart rate, which again just exacerbates the fact that you're not getting oxygen into your brain. And now all of a sudden you're prone to producing erratic behaviors, which, in its extreme, looks like you go long, and then 2 seconds later you reverse decision and you go short. 30 seconds later you go long again, and then you change your mind again, you go short, and you keep on closing yourself out. It never hits your stop loss, but you keep on changing positions simply because you've gone into a sympathetic state of arousal. You don't have enough blood oxygen carbon dioxide mix that's going into your brain. Your muscles are totally constricted, and your sensory modalities now have gone offline because you've gone into vasoconstriction. So it's very important to mitigate the heart rate, to recognize when you're moving into a state which is sympathetically inclined, and start to relax oneself to be able to go into a parasympathetic predisposition. And this next trade is a good sign of that. This is a winning trade in the morning when the trader had noticed early in the morning that he was coming on with a fever. And so you have the stress of a fever, so you have a deterioration of the biology of the trader, and in addition to that, you have a self-awareness of the trader to actually know that and to start to mitigate the heart rate through breath rate in order to maintain an optimal enough state of biology prior to going home. So much the same way as the other winning trades, you have a relative consistency in the stability of the power spectrum. This was the entry position. The exit wasn't marked, but the exit is here. And you will notice that the power spectrum has dropped down to 500. And this is simply because of the onset of the fever. In the next graph, you can see that, again, the amplitude of the heart rate is decreased simply because of the onset of the fever. So its point of the presentation is to demonstrate the importance of heart rate and the way that it affects winning and losing trades, and the way that winning and losing trades also affect heart rate. So if you're in a state where you're feeling this sort of biology, which means that your heart rate is fatigued, it's a suboptimal decision-making biological state. So the question would be, do you really want to risk money when you're in this state, when you do have the capacity to be in this sort of a state, which is an optimal decision-making state? So, you know, on a biological at a biological perspective, this is the type of state that you invest in. This is an optimal decision-making state, and this is a suboptimal decision-making state. And so when we're either trading with our own money or with other people's money, the way to really discern on whether or not you're a horse to be bet on is simply to have a look, or to start to have a self-awareness and say, I really don't feel good today, or I really don't feel good in this trade. My heart's coming out of my chest, my hands are sweaty, my fingertips are cold, I'm not in an optimal state. How do I know that? Well, because I've just gone into vasoconstriction. So, which means that I don't have the right amount of blood oxygen supplied to my brain. So the decision that I'm making at this point in time is most probably not very good. So this is what we're all on about. This is what we've been doing for the last 8 years, and now we're just starting to come out in the institutional market and host webinars with people like Derek in order just to inform retail traders of the need to start to have an awareness of these biological factors so that they can be all the more successful in their day-to-day trading, or at least have a means by which they can monitor themselves and progress forward, because this is truly the future of trading. Will be all biological based in the next 5 years. Most institutions would have adopted it, and so we want to open this awareness up to retail traders as well. And so that'd be pretty much it, Chris.